Good afternoon. I just wanted to elaborate on the usefulness of tax transcripts for somebody who has passed away. I was talking to another tax pro on X the other day, and they had said that a decedent had received a 1099 INT in their name and social security number for the tax year of 2023, but they had passed in 2020. This is very common if you do not pull transcripts or call the IRS for prior periods of taxes that a decedent may have filed. Typically, what will happen is maybe there is a issue with the return and they're holding up a refund for a prior year. This can occur quite often when they file and they omit some information that may be beneficial for them just due to lapses in memory or somebody else trying to take care of their taxes for them. So in this particular case, we don't really know what's going on, but as a practice at our firm, we typically pull 3 years of tax transcripts for the decedent. We also ask for 3 years of prior tax returns, and then what we'll do is we'll go through those tax returns with the account transcripts, the wage and income transcripts, and make sure that everything that are on those returns account-wise is also accounted for in the report and inventory for the attorney when they're filing for the estate, just so we know that there's no stones unturned in trying to find all the assets. A big example of this past year for us was an individual who was about 59, 60 years old. He had passed away, and he was trading cryptocurrency and meme stocks on Robinhood. His family had no idea that he was doing any of that. What triggered us knowing that there was also a checking account in there was us putting together basically a reconciliation of deposits and withdrawals for the estate bank account. And we traced a bank account number to the Robinhood account. And then also we waited for transcripts to come in for the current tax year, which was 22 for this individual. And we saw that Robinhood issued some 1099s. And so we were able to pinpoint basically that an account existed. There was some activity. And for this individual, because there wasn't quite a bit of income for that filing year, the income from the cryptocurrency, the meme stocks, easily would have had the statute of limitations open for much longer if in the future the IRS decided to actually look at their own transcripts and put together that this taxpayer should have reported something, which we all know is unfortunately not very common. We will be catching issues quite frequently before the IRS will for our clients. But in this case, particularly with my experience in dealing with estates and trust, it's just a good practice to get into because there have been prior issues of people receiving refunds and then having to basically reignite the emotions and the memories from their past loved one and having to go reopen a bank account to deposit it into the estate's name. And then once they get a deposit, they take the cash out and then they have to close the account again. And sometimes a bank, makes them set up a debit card and it just gets very tedious. So we basically tell everybody up front, this is a best practice. It's not for us to get fees from you. It's for us to do an adequate job as a tax professional and support you in your fiduciary duty. And best to do that is for us to explain to you the issues that can occur and for us to attempt to prevent them. They might not actually be there, but it's better for us to be proactive than to just assume that things will be okay. At least that's the stance that we take. It's paid off well for us, particularly because we're able to prevent things for our clients. And in the case of the cryptocurrency issue with the taxpayer who was 60, his son had no idea, the attorney had no idea. And so we prevented some issues there. And they were really thankful that we pulled up the transcripts. So I just wanted to make a video on the benefits of tax transcripts and whether or not Uh, you as a client, if you're watching this, or a prospect, you've ever heard of them. A lot of firms don't seem to use them. And then if you are also a tax pro, if you use them, and in what ways do you use them? Anyways, thanks for watching.